Hi everyone, it's Evan here from the Trade Risk on Friday, February 10th with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off the video with some sector analysis. So pop the champagne this week. We closed at all-time highs across all of the major averages. S&P 500, NASDAQ Composite, Dow Jones, and the Russell 2000 all finishing at all-time highs, no overhead supply, and uptrends on all time frames. So that might make you a little scared. That might mean that there's a little too much euphoria in this market right now for your comfort, or if you're a shorter term momentum trader or trading very tactically, you may like the fact that we are closing across all-time highs to give you the support and breadth that you'd like to see in markets. Let's take a look at the technicals and see what we can come up with. The S&P 500 finished up almost 1% on the week, continues to grind higher here on the weekly time frame. A thing of beauty as the MACD is making new highs, so new momentum highs here as we continue to grind out with no real pullback ever since the election last year. This market has gone effectively straight up with a long period, 5-6 weeks of going sideways, which we're all getting bored of, and now we finally starting to see that resolve to the upside. Was certainly some uncertain times in here just over a little week ago as we started to break down here, almost had that 1% intraday down move, but the bulls did stabilize us at that 20 period EMA, and support around this rising trend line continued to hold. So ever since that hold, this market has picked up some more steam to the upside. We saw 3 nice candles here to finish off the week, and yes, closing again at all-time highs, a little bit off the highs of the session, but still pretty good. So that's the look of the S&P 500. Again, 3 days up now with a little bit of range expansion yesterday on Thursday. So maybe due for a little bit of pause here. Maybe next week we kind of check back, consolidate a little bit, let these fast-moving averages catch up. I mean, we really just broke out here on Thursday to new all-time highs. So if we really want to squeeze here, really keep the pressure on some of that sideline cash, force people to bid up, then we could continue to float higher here, similar to what the NASDAQ 100 has been doing over the past couple of weeks as it continues to sort of float higher. That could be in store for us here in the S&P 500. But again, on the downside, if we do start to pull back a little bit, this would be the first line in the sand that I'm looking at, this 229.50. These were the now previous highs that we just broke out of on Thursday. And then I'd pay attention to these fast-moving averages, this rising trend line, this level in here around 228. So there's quite a bit of confluence all in this general area, but for now the market seems to be kind of zooming away from it to the upside. So there's strength here. It's tough to really fight this. I would not want to be fighting it. If your strategy is perhaps scaling into some protection or some longer term put spreads, those types of things, I get it. That makes sense to me. But I would not want to be trying to average up and really fight this yet, just because we have no idea if a continued squeeze and a continued run could really start to take place here. Now, we know that the market has not had a greater than 1% intraday move. So some type of a spike in volatility, some type of sell-off, it's due, right? It could happen tomorrow or it could happen in 3 weeks. We really just don't know. So continue to pay attention to the near-term support levels, continue to watch that market breadth day to day, and just take it day by day and continue to sort of respect the uptrend. That's certainly the way we're approaching it at this point. Let's look at some of these other moving averages, these other major markets. IWM had been the laggard for quite a while, and still arguably is, as it barely ekes out an all-time high. But you can see trying to resolve a very long extended channel here, which really has a lot of pent-up supply. So again, there's plenty of sort of fuel in the tank here if the Russell 2000, if the small caps want to start to get going and really put in a meaningful second leg higher. Again, we don't know that is the case yet. This could be some type of false move here. Could be like what we saw in the S&P 500 just a few weeks ago, where it popped up above meaningful resistance, went sideways for a couple of days, and then fell back down. down. So we'll have to pay attention to that. But for now, I think it's, again, worth respecting. We've been consolidating for a while, finally starting to resolve some highs. So I would want to pay attention to that. NASDAQ 100 maybe getting a little bit tired, as this has been doing a lot of the heavy lifting for this market over the past, really this whole year, as it's continued to just move higher here. It's had now 6 or 7 up days in a row. So again, wouldn't be surprised to see a little bit of a pullback or some digestion set in. Once again, though, the chase is clearly on. So who knows with this market, we could continue to just kind of gravitate above this 8-period rising EMA and continue to just push out new highs. So that is the landscape. It's quite bullish. Again, I don't know if it's quite euphoric yet. I don't know if I've seen enough just praising the stock market gods that we're all at all-time highs and happy. I think there's could still be a reasonable amount of cash sidelined. Again, this is all from my pigeonhole perspective, which may not mean a whole lot. Certainly doesn't mean much to the market, but that's just my 2 cents. For us, the way we're playing it is we're involved in the market. We're not all in, but we're continuing to have exposure on. We increased our exposure throughout the end of this week, so we're continuing to move up those stops, rotate through names, and that's the way we're playing it, looking for that strength and some of those emerging sectors that have some strength, and we're going to get into that in just a little bit. So let's look at some of the other major averages, TLT, or major markets. TLT, really not a whole lot new to say about it. We talked in our weekend or midweek video this day right here. Actually, no, it was this day here on Wednesday when we had this strong move higher. It looked like the bulls really wanted to come back up here and test the top end of this resistance, where it was resistance, and that never happened. We actually gapped lower the next day and then saw more follow through to the downside on Friday, even though this intraday session reversed it a little bit. But you can see we're just inside of this range here, quite messy. Anything can kind of happen in this range. No clear direction. Of course, the longer term trend since last July, August, September, October has been to the downside. So let's wait to get to a more actionable area, either up here around 123 or this trend line that extends from the December lows. That's what I'd be paying attention to there. GLD continues to work itself higher. Bulls not giving up. They saw a little bit of a reversal on Thursday, a little bit of early down pressure here on Friday, but then again, the bulls stepped up, closed us near the highs of the day, finishing positive. So GLD short-term trend still does remain higher, above 116 resistance, above the 8 and 20 period. Short-term still looks good. Silver, very much similar action, closing this though at weekly highs here, so taking out the prior highs from the past couple of days. A little bit of sideways action came through here on Wednesday and Thursday, and then we saw a nice 1.6% move to the upside on Friday. So SLV silver still looking good ever since breaking this trend line here to the upside. Looks like it continues to want to float. Short-term bulls are in control there in SLV. USO was one that took us for a little bit of a ride this week. We tried shorting this earlier on this breakdown right here. Tuesdays when we got short this market via DWT. We saw a little bit of a reversal get staged on Wednesday, and then we saw this gap up Thursday. We dumped our position here on Thursday, luckily so, because Friday we saw more follow through to the upside. So we're out of this, took a little bit of a losing trade. We'll cover that in our recap tomorrow, most likely, or a little bit later today in our trade recap video. But USO, is stubbornly still in this sideways range. Not much else to make of it. Needs to get above 1170, 1175 up here. That would start to convince me that the bulls certainly do have control here. Or on the downside, it would have to lose this 1110, which coincides to about $52 a barrel oil there if you're looking at the spot futures contract. So weekly still sort of a wait and see now. A little bit of volatility here, finished down on the week, but you can see the long tail that the buyers sort of drove higher there. So USO kind of a wait and see one, and UNG still kind of a mess, is hanging around at the bottom end of this channel here. Not too much to do with it, just not that interested to me. So I'm just going to kind of pass and give it some more time. So that wraps up some of the major averages. Let's look at some of the sectors. So technology, no surprise, right? This has been on our list, continues to move higher, continues to make all-time highs here, and no exception on Friday or this week. XLY, discretionary sector, really coming to life over the past 3 days here as this moves to all-time highs. It's been kind of quiet, grinding around, consolidating, and then it had, again, this sharp week here where it was up 1.5%. So quite a move there in the discretionary ETF. XLI also really starting to get going here, closing at new all-time highs. That looks good after consolidating for some period of time. Materials look like they could just be getting started. They've also been consolidating for the past couple of weeks here. A little bit of this downtrend line that they broke on Friday, finishing up 1%. So could start to see, or could continue to see, some more rotation into that sector. And then financials, I think, are going to be very interesting because financials really haven't broken out. They're trying to at the end of this week here. I think it was a marginal new closing high here, but we want to see if this can really get some more pep in the step to potentially support this market, bring in a new wave of momentum. I think that would be pretty powerful to get financials now, into the rotation to help fuel this market. So that is sort of the stance there on the sectors to pay attention to. XLF and XLB would be the two that I'd be paying attention to see if they continue higher, and to the XLI. And really, to circle back around, it's the Russell 2000 that I think a lot of this market momentum, continued market momentum, hinges on. Really want to see if we can get these small caps lifting back and breaking out and emerging to the upside with some authority. That's what's going to continue to really fuel this market, particularly if the Qs need to take a little bit of a breather here. Not to say that they have to, but just to say that they've done a lot of hard work here. Again, up 6-7 days in a row, whatever that number is. So perhaps a little bit of rest there, and then the slack get picked up from the IWM. So that is the recap for this week. Hope you guys enjoyed. If you haven't subscribed to our channel, please do so. Bottom right hand corner just keeps you up to date with all the latest that we've been publishing. Thank you guys for watching. Have a great weekend, and I will talk to you soon.